Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries. In case you're watching this show for the first time, well, the WhatsApp number is flashing on your screens. That's where you send in all your queries to me. Don't forget to mention your name, location and your contact details. We can also give you an opportunity to speak to our top market experts to also take your guidance and specific custom-made advice as well. Alternatively, you can also log on to YouTube on Business Today. You can log on to Daily Calls Live and send in your questions on the comment section, and I'll be happy to pick up some questions from there to address it with our top market experts. Let me now introduce to you our guest of the day. We have Mr. Akshay Bhagwat, Senior Vice President, Derivatives Research at JM Financial Services, now joining in on the program. Akshay, welcome. Good afternoon to you. Hope you're doing well. I wanted to first kickstart by asking your view on the markets. We've been seeing, 200 to 250 kind of a dip today on the Nifty, 24,592. What's the sense that you're getting? Why so much of volatility is something that we are seeing in the markets after having recovered quite a bit? Why is the market yet again struggling to move up?
So, good afternoon. If you look at the broader market view, it's been, I think it's the third month where we are having straight gains in the Nifty, a one-way recovery from 22,000 mark. So technically, if you were to look at this move, we are getting into a time correction where most probably it's a range-bound scenario, which might play out for the next 10 to 15 trading sessions. Now, level-wise, if you were to look at it, then the lower end of the range can be as low as 24,000 and the upper end of the range somewhere is around 25,300. So be prepared for some choppy directionalist trades. As far as news action goes, there is a slight scare about COVID getting back on the global scenario. And besides that, trade war continues to haunt, but that's more taken a backseat right now. But these are the two aspects which the market looks forward to. So choppy directional trades is the order for the market in the next 10 to 15 trading sessions.
Got that. So that's the overall view as far as the markets are concerned. We have some questions already pouring in for you. So we'll start taking some of those questions actually, and we can keep coming back to some specific sectors and themes that warrant our attention at this point in time. We'll take the first question. This one is from Chandan Jain. He is from Hubli in Karnataka. He says, I want to know about BSE, Bombay Stock Exchange stock, purchased at the rate of 2,500. Should I continue to hold on, or should I book profit today? The stock is down, so I want to know what exactly would the view be on the space right now. 7,004, 4% of a cut today, but it's been on the way up. Do you think for those holding on from profits from 2,500 odd levels? So first up, congratulations to Chandanji. But what would be the ideal advice here?
See, BSE, first thing is, I think the record date for the dividend is today or tomorrow, I believe. But that is one thing you should look forward to. And secondly, there is some unofficial news doing rounds about a change of expiry for the NSE. It's not official, it's not confirmed by SEBI,
Okay.
but speculation has seen slight bit of a downtick on this particular news in the morning trades. Now, really, till we have no confirmation, we are not going to comment on this. And looking at the broader chart structure, I think since our caller is holding this from an investment perspective at very lucrative levels, there is no reason to be worried in the stock. Short term, you might see the stock seeing some bit of profit taking. 6,500 can also be the downside, but really from an investment horizon, it is still a buy and a hold looking at the broader or the long term chart structure.
Okay, got that. I hope this has answered your question. We'll definitely keep an eye out on what's really happening with the expiry. In case there is any thing prominent, we'll definitely help our viewers understand that. Next one is from Momita. She's from Kolkata. She says, Hi Sakshi, I'm holding Angel One. So again, from the capital markets related story, the next stock as well. She's holding this stock at 2490 odd levels, and she wants to know whether she needs to exit right now, and or is the near term prospect positive from here on. What exactly would you want to advise her? And she also has a question as to whether she should transfer her position to maybe an AU Bank or an Idea Forge from the defense space for the fresh entry.
Well, I believe the price structure of Angel One is still positive. Even if you were to look from a near-term perspective, this stock has seen what we call as a classic double bottom, which is more of a bullish formation on the charts, where the possible targets can extend to 3,200. That's your first target, and best case scenario 3,500. That's from a 2 to 3 month time horizon. So you can continue to hold with this stock. 3,400 is the broader target. Till 3,400, continue to hold. That's the advice for Angel One.
Okay, got that. You can hold on. That's the view that's being suggested to you. How about AU Bank or Idea Fort? Since she has asked this, between the two, where do you find prospects positive?
Well, I think Idea Forge, if you look at the price charts, it's just this month where after, I think this after 12,1,250 listing, the
Yeah.
stock is showing the first signs of reversal or bottoming out, because the journey has been a one-way fall, and those who have been got the IPO have been on the wrong side of the trades. So this is more of a pullback rally. The only positive thing is that volumes are significant in this recovery rally. So I believe if you were to make a choice between the two stocks mentioned, it makes a lot of sense to go for Idea Forge, considering the risk reward payoff. So from a chart perspective, 650, 700 is the upside recovery rally you can look forward to, and with those targets you can be invested in this stock.
Okay, fair point. Let's take another one. This one is from Maurya. He's from Bengaluru. And he says, I need an outlook on Bharti Airtel for June series. Can I buy the 1900 call option on Bharti Airtel? That's his question.
Absolutely. This stock has a very strong positive setup. Now, since you are dealing in the option segment, if you go by the nature of trading, this stock most probably, the way it trades is that 8 to 10 trading sessions, it sticks in a range, and suddenly you have one day where the stock shows a strong momentum uptick. So right now, technically 1800 is a good strong support for the stock, and the price projection based on the technical analytics work till 1900 for the month of June. So keep a stop loss below 1800 basis spot in Bharti Airtel, and you can consider buying the 1900 call for June month. If it goes on the expected lines by 15th, before 15th of June, if 1900 the prices are hit, you can easily expect a doubler in the options premium from the current rates.
Okay, fair point. So that's the view that's coming in. Let's take another question. This one is from Nagesh Godri. Again on WhatsApp, he's writing in from Karnataka that my question is on Motherson Sumi wiring. I want to know that at the current levels of around 56, can I buy 1000 shares? And I do have a view of about 1 to 2 years time frame. What exactly would you suggest on Motherson Sumi wiring at the current levels?
Yes, if your time horizon is over 1 year, you can consider buying it. From a technical or a price reading perspective, last 3 months have seen the recovery rally from 48. So somewhere going by the longer term charts, 50, 48 zone is a very strong pivotal area where time and again the stock has shown a tendency to bounce back. From a 1 year investment horizon, possible target projection can be around 70 to 75 zone. So that is the targets you should be working with. And 45 is the stop loss if you want to put a cap on the risk in case the view goes wrong.
Okay, fair point. I hope this has also helped you out, Nagesh, in terms of the suggestion that's been shared by our viewers, by our guests. Satya says, he's all writing on YouTube, says, hi, good afternoon, Sakshi, good afternoon to you, Satya. He says, I really find Akshay's suggestions very good. Although I have missed many of his recommendations, I do want to know if he has anything that he can suggest to me. I also have my own query, which is on FDC, where I have my position at 390 and Morpin Labs at 60. So should I continue in both these stocks? And of course, his own particular recommendation. Satya will definitely ask Akshay to give his own choice of stock for you. But FDC, you bought at 390, so you're sitting on profits. The stock is at 460. The second one is Morpin Laboratories, where you took an entry at 60 levels. Let's ask Akshay what is the outlook that he has on both these stocks first. Akshay.
Yeah. So I believe both the trades are in profit, and The charts which I saw for both of them, they are more from short to medium term perspective, because really from long term, I'm not able to get any strong technical setup. So right now, Morpin Labs, you can consider booking it out somewhere around the levels of 75. That is the possible target area you can look forward to. And for the other stock, I think it's better you take your profits at the current level. FDC is the stock which you mentioned. So we have had a recovery rally in the last 3 months in this stock, and somewhere there is strong resilience at 480, 500 zone. So I believe it's better to take some profits off the table in this counter too. As far as any fresh recommendations from my side, you can look forward to a stock called Federal Bank. It is from this mid cap banking space, and technically a very strong long term price picture which I see on the charts, which shows promise of 230 to 40 target zones. We are right now at 200. So 40, 50 rupees upside from current levels is what I look forward to. It's more of a medium term call. And with the support of 180, you can buy this for the targets mentioned.
Okay, got that. I hope everybody, who including Satya, have noted that down. Federal Bank as a choice of stock from Akshay, and you've also got the suggestion from him on your own stocks that you are holding in your portfolio. Let's take the next question. This one is from Samvit Nageshwar. He says, "Hi, good afternoon to everyone. Good afternoon to you, Samvit." He says, "I want to know about Whirlpool India. Posted decent set of earnings, so I want to know whether it is advisable to invest afresh in Whirlpool India from the consumer durables." Let's look at the stock clearly, because I think that will really help all our viewers also understand a little bit more about the stock. Today it's down by 1% odd or so in the last 1 month. However, there's been a climb up of 12, 13 odd percent for the stock. In the last 6 months, it's been rather sideways with the negative, kind of returns of 29%. We've also seen in the last 1 year, the stock has given up about 17%. Last 5 years also, however, we have seen a dip of about 32%. So it's actually been on a downward path, at least from October onwards. It has actually climbed down quite a bit from 2367 odd levels all the way to 1251 right now. Akshay, what's your suggestion on Whirlpool?
See, technically, it is still in a downtrend. It is going to take some more time for it to
Okay.
recover from it. So, really, if you're considering from a long-term investment horizon, the situation works differently, because in the short-term time horizon, do not expect any fireworks in this stock. So, right now, it's more of buy and accumulate. You may see the stock again probably dipping till 1,000. That is the room on the downside you need to keep for. And with a longer term time horizon, yes, situation can improve, and again you might see a recovery. But as of now, you can buy and hold. 900 is the support, and eventually we need to revisit the charts in next couple of months to see if the recovery rally is happening or not.
Okay, fair point. I hope you've got the answer to your questions, Amit, and such important moves should definitely be kept in mind. Let's look at Ankur Kumar Gupta's question. He says, "Good afternoon. I want to buy NTPC Green Energy and also ITC Hotels. I want to know whether it is the right time to enter into these stocks at the current levels for about 1 to 2 years time frame." NTPC Green today is climbed up about 5.5% high. It's at 111 right now. And when we look at ITC Hotels, that's also been showing us some uptick. But of course, here it's relatively much lesser data for you to really suggest. What exactly would you view?
Well, see, green energy is a theme which has been very promising and being sold since the last 3 4 years. But unfortunately, looking at the stock price after it got listed, there has not been much of an upside, as I understand. It's been consolidating, but somewhere 90 95 is the level where it's formed a support base. So really, for this theme to play out, it's still not, although spoken much about, there is no traction which is happening, at least going by the stock prices. So I believe if you are keen on this space, then you have to give it a lot of time. Minimum 2 3 years will do justice. So if you are comfortable with that time horizon, then you can buy and hold it. But technically, really, there is no evidence right now of any major upside, at least from the short term time space. Moving on to the other stock, I believe the other stock, if you can mention, I just missed it.
So after NTPC Green, ITC Hotels is
AC
something that they
Hotel.
want. Yeah.
Yeah. So ITC Hotels, yes, here, this stock has been in a range since long, and probably the sense is because of the global concerns, the war situation which was there 15, 20 days back. All these things prove a dampener for the hotel industries, but really longer term price activity looks promising for ITC Hotels. On the charts, at least there is more clarity that 180 is the very strong support base, and possible price projections work till around 240 with a time horizon of a year plus. So if a comparison is to be made, ITC Hotels should be the choice.
Okay, fair point. Let's take Muthailu James' question. He is writing in on our YouTube and says, Good afternoon, Sakshi. Good afternoon to you, Mr. James. He says, I'm from Hyderabad and I want to fresh apply and invest in Reliance Industries, but I have a short-term view. Could you please advise me how I should proceed? Reliance, after a long haul of consolidation, started to climb up above those 1100 odd levels, all the way above 1400 now. And after these kind of levels were seen again, the stock is now stuck in a range. What exactly, Akshay, would you advise? Is it advisable right after the considerable 10-15% of a move that we've seen in the last 1.5 months or so? Can one invest in Reliance right now?
Yeah, if investment is the objective, yes, definitely. Momentum wise, last 8-10 days have been pretty good for Reliance. After a long dull phase, it's finally caught steam. But lately, again, last 5-6 trading sessions, it's been confined in a trading range. But eventually, I believe from an investment horizon, you can see stock revisiting 1600 and plus. So I think, yes, from an investment level, you should be holding or buying Reliance.
Okay, got that. I hope this has also answered your question. Let's take another one. This one is from, we have this question from Vinita Gupta. She says, Good afternoon. I want to know about two stocks. One is HPL Engineering at the rate of 490, and the other one is RK Forging, which I have got at 623. Any suggestion on how I should proceed on to both these stocks? HPL Engineering at 490 and RK Forging at 623.
On the charts, HBL Engineering looks good from a longer term perspective. It's been choppy of late since last couple of years, but the clarity emerges that 400 is a very strong support, and technically the setup is hinting for the stock to revisit its all-time highs of 750, probably 1 year plus. So yeah, you have bought it at good rates. You can average it out, but give it minimum 1 year time frame with a target of around 750, 1 year plus time horizon. So that's the trend
Okay,
for HBL engineering.
got that. Okay, let's take another one. This one is from one of our viewers, Kamlesh Narkere. He says, Hi Sakshi, hi Mr. Narkere, how are you? He wants to know about between the three, Hero Moto, Voltas or CDSL for 5 years time frame, which is the stock he should be really looking at? Hero Moto, Voltas or CDSL? Where do you find most amount of conviction that for the long term, 5 years plus kind of investment horizon, which one should one really invest in at the current levels in their portfolios? From the two-wheeler basket, Hero Moto, CDSL or Voltas?
First of all, technically, making a view for 5 years would not do much of justice. I think fundamentally you need to consult your advisor on the financials of the company. But what I see on the price charts and completely based on my price reading, I believe Hero Motocorp should be the stock because it has corrected significantly since the last year, and right now at levels of 4,000, 4,200 odd levels, it's a good risk reward payoff which the company offers from a price perspective, and from a longer term perspective, I believe 3,500, 3,600 is a good strong support which the stock has. So this is the best stock setup, I believe, from a long term horizon out of the stocks you mentioned.
Okay, fair point. I hope this has answered your question well. Next, Sai Kiran wants to know about, Sky Gold or Goldium. He says, Akshay sir, which one would you advise to buy, Sky Gold or Goldium for a fresh buy for 1 year period? And could you also suggest any target for the same? Sky Gold from the gold theme that we have been looking at, or Goldium International?
I believe Sky Gold is better placed on the technical charts. Monthly, last 5 months have been in a range, but the clarity emerges that 300 is a massive support. So right now the volumes are a bit off track. It is moving sideways, but eventually it is setting up for a price breakout, post which you might see revisit of 450 levels. So 450 is the target area for Sky Gold with a stop loss below 280. And Goldium International too is technically well placed on long-term charts. 320 is a massive support. Time and again there has been bounce back attempts being made from these levels. And I think if a recovery is seen from a 1 year perspective, 550 may be the targets in the making. So I believe both the charts are strong. If a choice has to be made, I think you can go for 50% of amount which is allocated to both these names.
Perfect. Okay, got that. Let's take another one. This one is from Kalpesh Patel. He wants to know about two stocks where he has a short position for June expiry in futures. BSC is the first one. Where he has a position at 6980. He wants to know whether 6800, 6700 levels can be seen in the short term till June expiry. And the other one is Vodafone Idea, which he shot again at 7 levels, and he wants to know whether 4 odd levels can actually come in on this one as well. Akshay.
Well, see, technically BSE is a strong script. Today, the reason behind the correction is the unofficial news doing rounds, which I discussed in the show, and
Yeah.
there is no real clarity on the news aspect. So, really, I believe if you're short and there is, it's just a sentimental driven
Recording in
sell-off.
progress.
So I believe you should be looking to book out in this small fall which we have, because technically this is a very strong counter. And Vodafone Idea too is not negative from the current level where it trades. 6.5 rupees has been a massive support from last few trading months, where time and again you are seeing bounce back attempts from these levels. So I suggest that you should not be shorting Vodafone Idea too at the current levels.
Okay, got that. I hope, Kalpesh, this has answered your question. Next one is from our YouTube viewers list, and this question is from one of our viewers who says it's a very useful show for all of us retail investors. Thank you so much. Would have helped if you would have written your name. As well, along with your question. He wants to know about two stocks. One is Sarla Poly, that is Sarla Performance Fibers Limited, and this one at 111 already has a position. Currently the stock is almost at the same level, 110.9, and the other one is NIIT at the rate of 175. The question is whether he should continue to hold on for the short term, and if you could suggest any target. Sarla Poly and NIIT.
Sarla Poly, technically 125 should be your target zone. This is for short term because there is that area will provide resistance for the stock. So take your profits at 125. NIT Limited, it's a weak technical setup. So I believe it's better you take an exit at the current rates.
Okay, got that. I hope this has also answered your question well. 1225. Let's take one more question. This one is from one of our viewers. Satya wants to know about if you could please suggest any stock from the pharma sector, Akshay, especially on Supriya Life Sciences. Also, he wants a view from you, or any other stock from pharma space that you could probably suggest, since pharma is coming back in action.
Supriya Life Science, yes, you can consider buying this. 875 is the target zone which it should head for. Technically very sound, been in a range, buying on support at 600, selling at 800, 850. That has been the price pattern which is evident since last 3 to 4 months. So this price pattern will continue. Book around 850 is the call. And any fresh recommendations in pharma, look at Divi's Lab. It's given a strong breakout of, I think, almost 8 to 10 weeks at the levels of 6200. So very strong development on the technical charts of post the breakout. 7000 plus can be the anticipated target. So Divi's Lab is the other name you can look forward to from having exposures in the futures and options space.
Okay, fair point. Let's take some other questions also coming in. We have this question from Bharat. He says, I bought Shivalik Rasayan recently at the price of 700. I am a long-term investor. Could you please advise if I can continue to average on this stock, or should I switch? Then if I should switch, then which exactly is the stock that I should switch to? Shivalik Rasayan bought at 700 odd levels.
So technically, there is no momentum which I see in the script. Any recovery attempts are always pulled down after the recovery attempts. So the only positive thing is that 550 is the saving grace or the ultimate support where multiple times the stock has held on. So right now, what you can do is you can keep a stop loss below 500. That's more of a risk measure. And in case this time there is another recovery attempt near 700, which is almost near your cost, take the exit at your buying price and might as well consider some other counters. Federal Bank is one stock which I mentioned on your show. You can look forward to switching over to Federal Bank. That looks pretty promising. So, Lodha or Macrotech developers is one more name from the reality space, which, if it interests you, technically it is very sound with an investment horizon of 6 months plus 1800 can be in the making. So, consider these two names if they work for you.
Okay, fair point. Let's take one more question that has come from our viewers. This is Satyan. He says, hi, warm wishes to all of you. Warm wishes to you as well, Satyan. He says, I'm actually sitting on a loss on few of the stocks in my portfolio. Three of those are Office Space Solution, GE Shipping and Amara Raja Batteries. I want to know whether I can continue to hold on. Not a massive loss, but 5% loss on Office Space, 12% loss on Amara Raja and 1% loss on GE Shipping is what he is sitting on. And he wants to know whether he should continue to hold on to his position or is it better for him to exit some of these. Office Space Solutions, GE Shipping and Amara Raja.
Unfortunately, technically, all these three stocks are languishing sideways. Volumes are pretty low. Well, there is no, price action which suggests that there can be some strong upside in at least in the short to medium term. So the suggestion is better to take an exit since the loss is minimal and it has not much dented your portfolio. Might as well switch to some other stocks where the volumes are ticking.
Okay, fair point. I hope this has answered your question well. Towards the end, if you could help us understand, Akshay, for the next week, which will be the expiry week again, what is the strategy that you would recommend to all the traders?
See, there is a slight selling pressure which is gradually building in the market. This is more of time correction, as I discussed at the beginning of the show, and there is a chance that the markets might see a slight dip in the coming week. It is possible if the Nifty drifts below 24,500, which is the immediate short-term support. So, in case it breaks the support, be ready for levels till 24,200. It's a short-term correction which is unfolding, nothing major to be worried about. But yes, there can be a slight downtick in the Nifty in the coming week.
Okay, there can be a slight downtick, so be prepared for that. All right, Akshay, we'll thank you then on that note for being with us on the show and helping all our viewers out with all their queries. Always a pleasure to host you with us. Thank you. All right, viewers, we'll look at the markets before we get into the second segment and introduce another guest who will be taking your questions now. 24,555. We are seeing increased pressure, 258 points of a loss. We are near the low point of the day. Over a percent cut is what we see at this point in time. The top contributors in terms of the losses are clearly Reliance Industries, that's now under pressure and is contributing 34 points to the decline. HDFC, ICICI Bank are other stocks which are contributing over 24 points on the downside on the Nifty. ITC, M&M, Infosys, TCS, Axis Bank are some of the other names. Just about 5 stocks are contributing on the positive side on the Nifty right now, including Bharti Airtel, Tata Steel, Geofin, BL and IndusInd Bank at this point in time. Let's in fact welcome our other guest on our program, Ruchit Jain, Vice President, Head of Equity Research at Wealth Management, Motilal Oswal Financial Services. Warm welcome, Ruchit. Good to have you with us. Tell us, what do you make of this fresh bout of selling that we are seeing in the markets? Is it going to intensify?
Yeah, hi, very good afternoon, Sakshi. Well, Sakshi, if we see, then no, the broader trend for the market remains positive. It's just that we have already seen a good run up recently from that low of 21,740 to no, about 25,000 levels without any meaningful correction. So the momentum readings were a bit overbought, and I think these are just usual corrections which we generally see, after things get overbought. So there are two types of correction. One is when the markets correct when they are in a downtrend. That was that correction which we saw from October 24 to March or mid-April 25. But since then, whatever we have seen, small bouts of correction which have been there in last 1.5 months, they have not resulted into a sustainable sell-off. Also, factors such as dollar index is still in our favor. No, even no FIs have been buying in the cash segment recently. So I think the downside seems to be very limited from here on. So I think no, this is a good market where such dips should be used as a buying opportunity. Initial support for the markets would come around 24,400 to 24,450 zone. So any kind of dip towards the support zone should be used as a buying opportunity.
Okay, fair point. I hope this has really got all our viewers to understand how the stocks are expected and the markets are expected to pan out in the near term. Let's take some questions with you, Ruchit, and we can come back to some themes that are ongoing and we can take your view on that. We have this question from Ashwini D. Rao on our YouTube. He says, "Hi, could I please know the right time to invest in Zen Technologies and Max Healthcare? Both have come out with their numbers and both have shown some kind of an uptick post earnings. What exactly would your view be? One is from the healthcare pack, the other one is from the defense space."
So I will start with Zen Technologies first. No, we have seen a good buying interest in last few trading sessions where, in fact, 5 to 6 trading sessions, the stock would consist on continuously on an upper circuit. This clearly indicates a good buying interest in the stock. So price-wise downside seems to be very limited from here on. So you can look to buy at current levels and keep some room that if you get any dip towards that 1600, 1650 kind of range, use that as a good buying opportunity. So no, I would recommend starting with current levels, maybe 30 to 40%, whatever you want to buy can be bought at current levels, and look for no further buying on dips. And as far as Max is concerned, I think no overall trend there too remains on the positive side. We have seen that high top, high bottom structure getting formed on the Max Healthcare. Right now, maybe just no consolidating no or showing more of a time-wise correction, but no, what we are witnessing that the stock has a very strong support base around 1060, 1050 kind of range. So here also similar views that the downside seems to be limited. So if you have a bit positional view of maybe next 2 to 3 months, I think this is a good stock where you can look for fresh buying as well.
Okay, fair point. I hope this has answered your question there. Let's take another one. This one is from Jay Shiv. He said, "Hi Ruchit sir, I'm a huge fan of yours. I want to know about two stocks, sir. One is JK Tire and the other one is ITC Hotel. इन दोनों में फ्रेश एंट्री लेवल प्लीज़ बता दीजिए." ओके जय, we'll definitely ask Ruchit to help you out with two of your stocks. You're a big fan there from the tire space, JK Tire and ITC Hotels. How would you advise?
Thank you very much, Jay. So yesterday we saw that the stock JK Tire witnessed a sharp up move with very high volumes compared to what we usually see on a daily basis. So and the entire tire space, in fact, recently have been buzzing. So I think the worst phase where the price-based corrective phase may be over for the stock, we could see a gradual up move towards 430 initially, around 420, 430 would be the range where the previous swing highs were there. So there the resistance would be there, and support now would become around 340 levels. So you have that range 340 to 440, 430, this 100-point range where the stock should trade with a positive bias. So no, but just because yesterday I think we've already seen a very sharp up move, no, use declines as a buying opportunity and keep a buy on dip approach for JK Tire. Now, as far as ITC hotels is concerned, relatively we have seen that the hotel space since last I think 3 or 4 weeks has again gone into some consolidation phase. But if you look at ITC hotels broadly, I think post listing the stock has managed to do well, and we are not seeing the stock going below its immediate support of 180 kind of levels. So I think this is one stock where if you have some patience and looking for more from a mid-term perspective rather than very short-term, you can look to buy ITC hotels at current levels with some room to add if you get any dip towards that 185 kind of range. So ITC hotels also looks good, but not from a very short-term trading perspective, more from a mid-term perspective.
Okay, fair point. We'll just take a few questions in a bit, but we have the SEBI chairperson talking about a very important aspect. Remember, we were discussing about BSE shares and why they have fallen in trade today. Akshay seemed to have indicated that there is some buzz that NSE's expiry application for Tuesday could be something that SEBI could grant, and we do have the SEBI chairperson really talking about the same. Let's listen in to what SEBI chairperson Tuhin Kanta Pandey had to say on NSE's application on moving the expiry date to Tuesday.
I mean, right now, whatever is a framework, it's there, and we will be issuing post the consultation paper. The comments we have analyzed, that committees have met, and soon we will be issuing further clarification on that.
Okay, the consultation paper is in the works and we could soon see some kind of an information on the front. Remember, there has been this tussle. NSE had initially talked about moving the expiry date to Tuesday, which was later on seen as there will be only one day and one cannot keep on shifting the expiry days. And Thursday is currently where the BSE has the expiry session. In case the consultation paper approves Tuesday as the expiry day for NSE, NSE is likely to have an advantage on that front. Let's understand from Ruchit, how do you think a shifting of the expiry really will work for NSE vis-a-vis BSE? And is that the key reason why BSE shares are also under pressure, Ruchit, that you feel?
So Sakshi, we have seen enough of this shifting in last few months, where a lot of changes have been done with respect to expiry days. Initially, the days of BSE got changed, then the number of expiries or the number of that weekly expiries got reduced. So I believe this would be one consultation paper which is going on. Whatever decision that SEBI comes out with, I think this would be a final decision, and that stability would be there for next few years at least. Where significant changes would not be done frequently. So, this judgment I think would be very crucial. And of course, as SEBI chairman has also indicated that, once that decision comes out, then only we would come to know that what is the final outcome of this entire consultation paper which is going on. But certainly, the expiry days, whatever has been in news today, in case, that's not a confirmed news, I believe, until SEBI comes out with this decision. But in case if NAC's expiry gets shifted to Tuesdays, then I think that would be a bit negative for BSE. So one needs to see that what the outcome is there, and rather than speculating that what the SEBI would do, I would request, I would suggest to wait for the clarity to come in and wait for the final announcement directly from SEBI. Then only make any assumptions or decisions on that.
Okay, got that. Let's take another question. This one is from our WhatsApp. Sumit from Delhi writes in, says, hi Sakshi. Hello, Sumit, hope you're doing well. He says, thank you so much for helping us navigate through this volatile market with all your guest queries being answered. Thank you so much for writing in. His question is on the power sector, Ruchit. He wants to know two good stocks among the four that he has selected. Okay, so we look at the ones that he has selected. Tata Power, Adani Power, JSW Energy and Adani Green. So two are the Adani Group stocks, Adani Energy and Adani Power. The rest ones are Tata Power and JSW Energy. Now he wants to know which are the two stocks that you could probably highlight among these four that he could probably look at from the current levels.
So as far as Adani Group stocks are concerned, we know that generally it's very difficult to find any kind of trended moves in these stocks. These stocks does not move according to the sector or according to the markets, but what of late we have seen that that they have their own moves whenever they do. So I would tend to avoid these names as of now, because there is no such trended up moves coming in the stock. JSW Energy is also more into a consolidation phase. Of late, we have not seen any kind of participation when the markets have moved higher in last 1.5, 2 months. So this also may be going through some time-wise corrective phase, which could continue for the near term. You can take limited exposure to JSW Energy, considering 420, 430 is a good support base for the stock. And once this time-wise correction phase is over, then you can expect JSW Energy to go higher, but not in a very immediate term. So I would advise is limited exposure to JSW Energy, but yes, you can take partial positions over here. Tata Power looks good. The stock has not moved in last few months within the sector, but off late it has started forming that high top, high bottom structure after forming a base around 330, 340 mark. So yes, Tata Power, JSW Energy. If I have to choose amongst these names, definitely preferable would be more Tata Power, and some exposure to JSW Energy can be taken at current levels.
Okay, fair point. I hope this has helped you out, Sumit, in understanding how do you navigate through the power names as well. Let's take another one. Gunjan says, hi, I'm a big fan of Ruchit sir. I want to know about two stocks, Ruchit sir. IRB Infra, bought at 48, or Indian Overseas Bank, again bought at 48. Can I hold more? Can I add more at the current levels? And could you please suggest a target for both of them? We are finally seeing some move on the PSU bank, so IOB is in focus, but IRB Infra has been consistently lagging. What would you advise here?
So Gunjan, one piece of advice would be always look for stocks which are participating in an up move. So if we look at last few months, where last 1.5, 2 months, when the markets have shown positivity from that swing low of 21,700, 22,000. So I think after that we have seen that there have been some stocks or some sectors which have not participated in this up move. So I would tend to advise to avoid such sectors where participation is not there. Now, IRB Infra does not look much negative from here. It is currently trading around its crucial moving average resistance, which is around 52. If the stock manages to surpass that 52 mark, you can expect levels around 60, but not expecting any moves beyond that as of now. So 52 is the immediate resistance for the stock. If that gets broken, then you can expect levels around 60. Within the infrastructure space, I think you can also look at NCC, where relatively I think the stock has started witnessing good volumes post its numbers. And now if this stock manages to surpass about 240, 242, then you can expect a decent up move in NCC as well. So IRB Infra, NCC could be on your radar, but the immediate resistances which I spoke about has not been breached in the stocks yet.
Okay, fair point. I hope this has answered your question, Gunjan. Let's take another one. This one is from Arihant Pavpant. He says, I want a view on either Varun Beverages or BEL. Where is a fresh entry warranted at the current levels? BEL has been moving up quite substantially with this defense move that has started on. But VBL yet to kickstart in the same fashion the erstwhile rally played out. What would you say?
So both are from the different sectors. So I don't think you should do a comparative analysis of
Yeah,
both.
yeah.
But yes, sector-wise, no doubt defense has been in flavor of it, and we have started a new uptrend in most of the defense names. And I don't think this is just a short-term uptrend, but this is going to stay maybe for next few quarters or next few years. So stocks have already rallied, but you can keep keep an approach to buy some quantity at current levels, and in case if you get any kind of dips in the near future in stocks such as BL, look to add more at current levels. The stocks have rallied, but overall trend remains very positive. So BL looks much positive from current levels also. But as I said, the overbought situations are there, so use corrections as a buying opportunity. Varun Beverages, I think the short-term trend is not positive yet. Maybe we would see another dip towards that 420 kind of range where the previous swing lows were there. So keep it on your watch list. Maybe around 420, you can take a review again.
Okay, fair point. Let's take another one. This one is from Namita Arora. She says, hi Sakshi, how are you doing today? Very well, Namita. Good to find you again back on the show with your questions. She says, please suggest if power mech projects or Voltam transformers are good stocks to buy for medium to long term view. So from the power related story again, power mech projects or Voltam, which one looks technically more positive at this point?
So technically, if I do comparison of both, then Power Mech projects looks better than Voltamp transformers. Voltamp has been trading around below the 200 DMA resistance, which is around 8,900. So in case if the stock only manages to give a breakout above 8,900, then we can expect some good momentum. But relatively, if we do comparative analysis, amongst these two in last 1.5 months, and the clear buying interest has been seen more in the Power Mech projects. So I think that outperformance could continue going ahead in Power Mech projects. So if you have to choose between the two, then you should definitely go with Power Mech projects.
Okay, got that. Power Mech is the choice then. Namita, hope you got that down. Let's take another one. This one is from Vikas Ahuja. He says, hi Sakshi, I have 50 shares of IRCTC, but before the split happened and I bought it at 411 levels. I want to know whether I should continue to hold on or should I switch, is the question.
So I think you have already seen much of the corrective phase now. No, before split means I can assume that you have been a long-term investor maybe since 2021. We have seen a long consolidation phase after the 10:2 split, which we witnessed in October 21. No, but these are not the prices that we should look to exit. The stock have already corrected from that range of 607, from the highs of 1100 kind of range in May 24 to 750, 780 now. So I think most of the corrective part has already been done in the stock. So wait for some kind of positive momentum to come in again going ahead. As of now, we have seen that the railways have already seen some good buying interest in last couple of weeks. So I think these are not the levels where you should look to exit. Hold on your current existing positions. Maybe if we get another leg of up move again going ahead towards 900 kind of levels, then you can take a review again over there.
Okay, fair point. Let's take another one. This one is from Nikhil Das. He says, hi Sakshi, good afternoon. Good afternoon to you, Nikhil, as well. Could you please help me get a recommendation on 3 PSU stocks which I can enter into in the current levels and hold for a period of 3 to 5 years? So an absolute long term for you to really find out at this point in time. PSUs have again been lagging. Over the last 6-8 months, there's been no sign of PSUs really, showing us a strong momentum thereof or so. But do you think one or two stocks could be actually picked out which probably have seen the worst and maybe getting ready for a new leg?
So I think yes, one would be definitely the PSU defense theme, because as I said earlier, also this is not a theme I think where the uptrend would last only for this 1 or 2 weeks, but I think this is the theme where you would see a sustainable returns going ahead. So I think within the defense names, BEL definitely looks positive. Stock has already rallied, so keep the strategy not to chase entirely at current levels, but you can buy some quantity and keep some room that in case if you get any dip in the near future, then you can add at lower levels. So I think within the defense space, you can go with BEL. Another PSU names, Concor is one stock which is looking as if the price-wise corrective phase is done. We have seen since July 2024 to recent lows, we have seen a good price-wise correction in Container Corporation. I think price-wise bottom has been done in the stock. We have seen some time-wise correction as well. So this is a stock where risk-reward ratio looks favorable if you are looking for next 2 to 3 years perspective. So Concor and BL would be two stocks where you can look for buying opportunities from next 3 to 4 years.
Okay, fair point. We'll just take one last question, and this one is from one of our viewers, Usma. She wants to know about State Bank of India, SBI shares. Will they grow from here is the question. A simple question and pertinent one from the PSU banking space, the largest bank that we have there, SBI.
So there is some short-term consolidation phase going on in SBI. But here if you are a bit mid to long-term investor, then I think you can look to add some positions at current levels. 740, 760 has been a very good support base for SBI, but there are no signs of any short-term uptrend in the stock. So if you are asking from a very short-term perspective, then I think there would be some price time-wise correction or consolidation in the stock going ahead. But 740, 760 remains a very crucial support. So if you get any dips in the stock in that range, that should be used as a good buying opportunity.
Okay, got that. Well, we will thank you then, Ruchit, for being with us on the show today and for helping all our viewers out with all their queries and ending, of course, sharing all your insights. As always, we hope that you keep on coming back and help all your fans connect with you and also help them understand much better about the markets and the insights that you share. Thank you. All right, viewers, we'll wrap it up at that on Daily Calls, and we will see you soon on another edition of Market Today. But do stay tuned. Also, we are getting to see a lot of earnings conversations, so stay tuned. It's an action-packed day.
Good morning, ladies and gentlemen. Just as the markets perk